Hey, you may be wondering how your portfolio is doing, and I don't really know how your portfolio is doing, but I can think about the market as a whole. And if we think about a portfolio that maybe has, let's say, 40% bonds and 60% stocks, because that's a good representation of many people's portfolios. The bond portfolio represented by the Barclays Ag has earned about 4% year to date as of September 8th. The S&P 500, or the stock representation of the portfolio, has earned about 14% year to date, which is pretty good. Now, keep in mind that your portfolio is probably different in terms of the construction. For example, in the S&P 500, you probably, or the stock portion of your portfolio, you probably have some international, you probably have some emerging markets, mid cap, small cap, and you actually probably have less tech exposure because in the S&P 500, about 30% of that S&P 500 is technology, and most people don't have that much technology. So if you think about your portfolio, you can think about these returns and at least have a dialogue with your advisor about your construction, and just keep in mind that you have some other pieces that don't exactly give you perfect alignment with the S&P 500 or the Barclays Ag. And then also keep in mind we've got some major events coming around. We've got the Federal Reserve continuing to lower interest rates along with something happening November 6th. So all of those will impact your portfolio. Make sure you do a review with your advisor. Make sure it's constructed accordingly for you to weather volatility, not mess with it. And remember, you think different when you think long term. Have a great day.